Hello, guys, and welcome. Today, I'll be explaining a very interesting strategy. It's always about the orb. Okay, it's going to be a 30 seconds opening range breakout. Yes, you heard that right. It's going to be 30 seconds opening range breakout. I never claim that I've I have created the orb in general. I never created anything actually. I just learned the strategies out there and then created my own touches, right? Whether it's my strategy or other people's strategy, I learn from them and then I make something on my own. Today, this especially 30-second orb is from a trader called PAX, right? He's a 27-year-old trader. He trades NQ and ES. He trades using DOM, right? So I learned that strategy not from him specifically, but from my mentor, trader Hermes. He taught me how to trade in general, like the basic of trading knowledge and ICT. That's where I learned from him, right? So he taught me this 30 seconds orb through a candlestick perspective. So I learned from him and then I created my own touches based on what I've learned in general. So the strategy is as is. The 30 seconds orb, the first 9:30 candle on the 30 seconds time frame, you mark the high and the low. Okay? So what you'll be looking for, you're gonna be waiting for the price to reject the high of the orb and then close down below. Once this pattern happens, you're gonna be enter on the closure of the candle and your stop is gonna be at the recent high the candle created, and you'll be targeting two risks to reward, and at 1 hour you move to break even. Okay, it's as simple as this. I'll be showing you some examples on the chart, but just for an explanation of the strategy, what I mean is the price rejects something like this, rejects away, and then close back down into the range. You'll be entering a market order your stop at the recent high, targeting to risk to reward, and at 1 hour you move to break even. Simple as this. And vice versa, if you are going for shorts, something like that, we need a rejection away from the orb, and then you're gonna be entering longs. At 1 hour we move to break even, and we're targeting to reward. Okay, so that's step number one. So let's say, for instance, what happened? The price did not reject, because it happens most of the time when the price just explodes on the open, right? It just closes here without any rejection and then keep on dumping. Well, don't worry, there is a way to ride the train with the price. How? Let's say, for instance, the price braked below and did not reject the low of the orb or the high of the orb and break back into the range. Instead, it dumped. So what do you do in this case? If the price kept on dumping, okay, you're not gonna wait until the price go back to the range, because there's a very low chance the price will do that, because when like in generally futures, NQ, ES, or Dow Jones, when they break out, they'll just complete the trend until they reach the high time frame key level and then reverse or retrace. But my point is, we are working in a seconds time frame, so that's going to be hyper scalping. So what do you do in this case? Since we are in 30 seconds and you see a breakdown and then keep on trending down, then you'll hop into a 15 seconds time frame, and then what you'll be looking for is a break of structure with a displacement. What does that even mean? All right, say the price did something like this, okay, and then breaks strong displacement, big displacement. All right, in this case, once the price does this, you will just spread that line right there. You place a limit order and then your stop at the recent high, and you'll be targeting two risk to reward, and at 1 hour you move to break even. You'll be waiting for a limit order, you're waiting for the price to retest that level, and then you want the price expecting to go down further to your TP. And this happens a lot when the price doesn't give you a chance to enter inside the range, then you'll be following it on the 15-second time frame. All right, so that would be step number 2 of the strategy itself. The first one is if the price rejects the orb, the high or the low, and then rejects back into the range, okay, and then you'll enter market order, you stop at the recent high or the recent low. But if the price, like, this could apply like on both, either shorts or longs, right? Like it's just same concept, right? Same concept. If you break above, you look for longs. Break below, look for shorts. But if you reject inside the range, reject the low, close above the range. Longs, reject the high, close back into the range. Shorts, your stop at the recent highs. Okay, it's going to be trading in seconds. Not easy. You need to try and demo, but it delivers a lot. It delivers a lot. It has a very high win rate. Okay, so enough just yapping about the theories, and let's do like perform a back testing on this strategy based on last week's price action. Okay, so let's get into it. All right, so starting off from our last Friday's price action, you hop into the 30 seconds time frame here, and that is the first 9:30 candle on the 30 seconds time frame. So what are we looking for? We're looking for a rejection of the high of the orb and the closing back into the range, which the second candle from the 30-second time frame delivered that. So in our case, our entry is going to be here on the close. You do not want to see a rejection and the price still closed above the range. That's an invalidation. You need to be exact, like you need to see something like this: a rejection and then close back down, rejection, close back down. We do not want this. You don't take this. You do not take this. Not this, not this. You take that and that. It's very simple. Rejection away, close inside the range. So in this case, we'll have our entry here on the closure. Your stop at the high. 1 hour move to break even, which already hits 1 hour, and it hits 2 hour. That is your TP in 1 minute. 30 seconds, 30 seconds. Well, 1 minute and 20 seconds, let's say. Simple as. Let's say you missed that entry for some reason. It will give you another entry right here. Stop here. But that will be a break even. You'll be re-entering again. If you're a trader who trades a lot, love to trade it, like keep on trading over and over and over, which I don't really recommend, but that's hyper scalping. Let's say, for instance, here, reject away and close back. Your entry is going to be here, but your stop is at the highest high, like the highest high from the orb that the orb created, which is going to be this high. Here, this is a protected high. And then you'll be targeting, well, that's 1 hour, break even, 2 hour hit. That is Friday. Okay, let's go back to Thursday. Let's see. Oops. That is Thursday. Yeah, that's ugly day, I guess. So that's the high and the low. Price failed to deliver to us here. Failed here. It did here. It did. It rejected away. Closed back into the range. Your entry is going to be here. Your stop is at the recent low, and you'll be cooked. Here you'll be cooked. All right. So when the open starting to be choppy, that's where the strategy won't really work, right? Usually the like NQ on the market open just has one direction, right? At least for the first 15 minutes. So this is not like that's very rare to face, which is unfortunate, right? Like just it chopped out for like 5-10 minutes, and then like it kept on chopping the entire session, and then just boom, dumped, right? So that day, unfortunately, you'll have a loss. Wednesday, that is the 30 seconds time frame. Boom, boom. Rejection away. Stop at the low. And then it hits 1 hour. That is a break even. Stops at the high, sorry, not at the low. That will be break even. and then it'll give you another re-entry, rejection, beautiful rejection away from the candle. Put in mind, that's mechanically, by the way. If you're trading live and you see that rejection, you could just enter right away market order. That's a bit of discretion, but like, you get my point. You'll have a better risk to reward. But at this point, reject away, closed back into the range. That is your entry. Your stop is at the low, and targeting to risk to reward. Beautiful delivery. Okay. Now let's go back to, well, that was Wednesday. Let's go Tuesday. High and low. Wow, that's just too clean. Reject away from the high of the orb, close back into the range. You stop at the high, and yeah, that's a 3-hour trade. But we're looking for tourist reward. You could be greedy, it's fine. Leave one running, but yeah, that's very clean. We go to Monday. So we have 3 wins, 1 loss. Monday. That is the high and the low of the orb. Okay, so that's what I meant when the price goes without you, right? It gives you almost no entry, because here we did not reject away from the range and close back into the range. We closed below the range. Also here we closed below the range, so that's not valid. So what do you do in this case? Do you just close the chart? You can close the chart, but why not just ride the train with it? What do you do in this case? You just hop into the 15-second time frame, right? 15 seconds time frame, and you'll be waiting for a break of structure with a displacement. Okay, what do I mean by that? Let's just walk the forward. Okay, so here, that's a clean break of structure with a displacement. That's a wick, that's a high, breaks it with a big candle, that's a displacement. You want to see how to define displacement. For me, I just like to see 2 consecutive same color candle, let's say bullish candle if you're long, and 2 consecutive bearish candle if you're going for shorts, that's close strong, like that, right? You'll be placing a limit order, and your stop at the recent low, targeting tourist to reward. Let's see if we're tagged in. We're tagged in, and then boom, very clean. Let's say you missed that entry. You missed that entry for some reason. You'll have another entry right there. Displacement, retest, beautiful rejection, and you have a clean delivery. I learned that entries from my mentor, Trader Hermes. It's a very clean entry. Has a high win rate, to be honest. You could just enter on any time frame, like 15 seconds, 30 minutes, 1 minute. That wick closes strong with a displacement. You have a wick with displacement, and then wait for a retest, and look how the price delivers. So in this case, you'll be doing this if you missed, or let's say if you missed, or if the price did not give you the rejection that you wanted to see from the orb. And that would be pretty much it. That would be like last week's price action. You could just refine the rules, refine the entries, or just backtest the strategy on like 6 months or 1 year of data, and then enjoy. It looks easy in backtesting, but in live, it's not easy, because you need to first calculate your risk and then enter. When you're talking in 30 seconds and 15 seconds, you don't have time to blink, right? But you need to just practice this at least a month, just reading it through a demo trading, and eventually you'll get used to entering on the seconds time frame. That will be it. I hope you guys enjoyed the video. If you have any questions, please drop it in the comment section. I'm more than happy to answer all of your questions, guys. Thank you. Bye-bye.